Well, folks, for the past 100 years, Wall Street's been able to do something very, very successfully. They've been able to do many things successfully. One of those things is be able to get retail investors to sell everything, the stocks they love for the long term, be able to sell those at very, very cheap prices and steal those shares right underneath them. Meanwhile, get folks to FOMO into the market at the worst times possible, right? And Wall Street has done this successfully for 100 years now. And the month of May, I think, was a great example of this playing out in real time right in front of our faces. And I got a lot to show you guys in this video, and I mean a lot to show you. That's going to be very, very important. I want to start it very, very simply. You pull up the S&P 500 for the month of May, right? The S&P 500 was everywhere from 4,300 to 3,800 at the lows, right? And meanwhile, during the month of May, we had all this drama, all the inflation stuff, the Fed stuff, earnings, so much drama, right? And meanwhile, a lot of retail investors just sold throughout the month, right? And just continued to put selling pressure on it and bought into the fear. And by the end of the month, what ended up happening? The S&P 500 was right back where it started. We had all that drama, all those people panic selling out of the market, all for what? For the S&P 500 to end up exactly where it started the flippin' flapjackin' month. Exactly. Isn't that amazing, right? Look at the NASDAQ. The NASDAQ finished down a whole 2.6% for the month. But the NASDAQ here was everywhere from about 13,000 on the high end to 11,000 on the low end for the NASDAQ, right? And everywhere in between, and all that drama that transpired and all those stocks that, folks sold off. Here's the deal. The NASDAQ went down 14% in 13 trading days. Now, when you're talking about the NASDAQ going down 14% in 13 trading days, you want to talk about volatility that will shake especially retail investors or inexperienced investors to the core and make them sell out of everything. Have the NASDAQ go down 14% in 13 trading days, and you will cause panic in the retail crowd. Not a lot of folks have been through major drops before, right? For a lot of us that have been through this game for a long, long time, we've been through some insane markets, right? Including, I've been through the worst stock market in the history of the stock market, which was 2020, right? March of 2020, the stock market dropped about 35% in 22 trading days. That was the fastest drop in the history of the stock market, way more severe than actually the Great Depression and the Great Recession, right? And so we've been through it before, but there's a lot of retail folks that have not been through this game before. And if you talk about shaking for the NASDAQ 14% in 13 trading days, you are going to get a lot of retail investors to absolutely panic and sell at the worst prices possible. And what is the number one thing you are warned to never do in the stock market? The number one thing is never panic sell stocks. But yet people do it. People do it all the time because they haven't been through this game before, and it's going lower and going lower, and they think, oh my gosh, it's just going to continue to go lower. And then like a rabbit out of the hat, all of a sudden the stock market's hardly even down after the month, and it's like, what? Well, what happened to the 14% down in 13 trading days? And now the market's around break even? And just absolutely blows people's mind how this transpires and how this goes on, right? You look at a stock like Amazon. This stock basically, just a week ago or so, dropped all the way down to $2,000 a share. This stock's come back nearly $400 a share. Nearly $400 a share in a matter of, a week and a half? Something like that. And, there were people selling off Amazon at $2K. Because they were afraid the stock was going to go to $1,800 or $1,700? It's like, you don't make decisions like that. That's not how you play this game. If you're a long-term investor and you love Amazon for the next 3-5 years, you shouldn't have been selling Amazon. You know what you should have been doing? Buying Amazon. Or at the worst, holding Amazon. Wall Street wants to trick you into the trap, okay? The trap of Wall Street, what they want to trick you into essentially, is trying to believe you're a whole lot smarter than you really are. And believe me, they can't even play this game correctly, okay? And basically what this game is the game of, I'm going to get it out of this stock. I'm going to buy it back next week. I'm going to buy it back next month. I'm going to buy it back in 2 months from now, 3 months from now, and trying to get you in this short-term gambling casino mentality, right? And as somebody that lives in Vegas, I understand like that whole game very, very well, right? The game of getting people to make short-term decisions around their money is a game that if you're the house, you're going to win that game more often than you're going to lose that game. I can promise you that. Just as Wall Street is going to be able to pick up shares from folks that sell some of these stocks at very bad prices. And Wall Street, at the end of the day, they'll get you all caught up into the short term, but actually what they actually care about is where these stocks are going over the next 3 years, 5 years, 7 years. They get you thinking that they care about the next 6 months, and they give the illusion, right? But really, they care about where these stocks are going over the coming years. And so, people just continue to fall into these traps time and time again. And you got people paying, selling Amazon at $2K because, oh gosh, it might go to $1,700 and it's just going down. And, falling into these traps. And it's like, you realize you're selling Amazon at multi-year lows, right? Right? Look at a stock like Corsair Gaming, for instance. This stock fell all the way down to $13.48 at the lows in the month of May, essentially, right? And at one point this month, the stock was $16.72. And so look at all this shaking around that happened in Corsair Gaming during the course of that month. But where did it finish? At the end of all the drama show, where did Corsair finish? Up 3%. Up 3%. You had all that drama from nearly $17 a share all the way into the 13s, but ultimately at the end of the day, Corsair was up 3% for the month. All that drama for what? For what, man? All those people selling. The thing you understand is there's people down here selling at $13, $14 a share. We're down there selling the stock off, right? Look at a stock like Oatly. My gosh, is this a good example of what was going on, right? During the month of May. This blows my mind. And here is why. Folks were selling off this stock at $2 a share. Oatly is one of the biggest game-changing food and drink companies we've seen in history. In history. If anybody that's done any research understands that, right? And there were folks selling off this stock at $2. This stock's going to be $20+ in a few years from now. And those folks are going to look back and they're like, yeah, I remember when I sold Oatly for $2. Like, come on, man. Because what? You think it's going to go to $1? Like, that's just literally ridiculous. This stock went up 44% in 14 trading days with no news. No news. There hasn't been any big news that came out with Oatly in the past 14 trading days. Nothing. And the stock just climbed 44%. Right? And so meanwhile, somebody, guess what? Whoever was selling those shares, they sold them to somebody. Somebody bought those shares for $2.86, and somebody was selling the stock at $2.88, and somebody bought those shares, and somebody bought them at $2.90. And those folks are now already up 40+% in 14 trading days on that stock, right? Like, they just made a great yearly return in a matter of 14 trading days. Like a 44, you can get 44, if you can get 40% a year, that's great. Like, you're an amazing investor. And they did it in 14 trading days because people like to make bad short-term decisions around their money and sell off stocks at absolutely just insane prices that they're literally, it's not even going to be that long. It's not like we've got to wait 10 years for somebody to look back at this. They're going to look back in 2 or 3 years and be like, are you kidding me? I sold that stock at $2. What was I thinking? Like literally, what were you thinking, man? Look at a stock like Avant. The stock's up 60% in less than 3 weeks. Less than 3 weeks, right? This is what happens in the stock market. People make panic decisions. They get scared with everything that's going on. And it doesn't matter what your earnings were. It doesn't matter what your balance sheet is. It doesn't matter what your income statement is. People just sell at any price they possibly can, right? Now, there's certain things that haven't really recovered much. One of those is ARK. ARK still finished down almost 10% for the month. So, ARK just continues to be in a very, very tough spot. And, a lot of Cathie Wood stocks just continue to be in a tough spot. Now, ARK did recover off the lows for the month of May, so that's good to see. But obviously, it's still a bad month for ARK, and that's something important to remember. Now, do keep this in mind when it comes to ARK, okay? It's very, very important. Something happened just a few weeks ago, and that something is there was a new ETF launched that's essentially a 2x leverage on ARK called TARK, okay? And so we'll see what happens here with kind of ARK moving forward, but I would bet you there's going to be a lot of people interested in playing TARK. And the reason being is everybody understands how volatile Cathie Wood's ARK Invest fund is. Like, you look at the price movement there. And so if somebody's very, very bullish on the market, let's say for the next week or the next month or the next 3 months or year, whatever, I'm sure there's going to be a lot of people that try to play TARK and hope, ARK recovers to, let's say, 80, and TARK will end up at least 2xing that, but it'll probably end up more than 2xing that, because the gains are obviously cumulative. And so, I think that's an interesting thing to just kind of keep an eye on. So I've added on my watch list not just ARK in a lot of Cathie Wood's biggest stocks, but I also added TARK. So this is going to be something very interesting to watch and see how this plays out as the summer goes along, essentially. I'm going to be watching that one like a hawk, okay? So now, Apple did not have a good May. This is a stock that ultimately ended up finishing down 5% for the month for Apple. And so we're definitely have seen some weakness start to come into Apple stock, right? And there's a stock that's held up very, very well in the market. We all know that. It's held up tremendously well in a very bad year for the market in 2022. But, it's definitely showing some signs of slippage here. And when you look at a stock like Apple, obviously it's good it recovered off the lows it was when it was down to the 130s, but this is still a stock that is in a little bit of trouble in the short term, just for the mere fact that, I think their numbers out of China are going to be really, really tough. And also, if you're talking about the U.S. consumer being not in the best place and the European consumer not being in the best place, there could be a lot of those $1,200, $1,000 iPhone purchases that are just kind of a little delayed for maybe a year or two until people are on a little more stable footing, right? And when you're a company like Apple that has these, insane estimates and what you're supposed to do, obviously that can hurt you. So Apple could potentially be in a tough spot for, maybe this next 6 to 12 months. And I think it's important investors at least understand that, okay? Now, you want to talk about a trick? Wall Street likes to play some tricks on folks sometimes. Look at the home builders. Pulte Home, 7.5% up for the month of May. KB Home up 6% for the month of May. Okay. Toll Brothers up 9% for the month of May. Okay. Wall Street likes to play some tricks on folks. And there's some tricks being played out there. What did we get throughout the month of May? The news got worse and worse around homes, right? Around real estate. The news got worse and worse throughout the month of May. But this is just a start. This is just the tip of the iceberg. The news for real estate over the next 6 months, in my opinion, is going to get pretty darn devastating. Now, I'm not going to predict a 2007 through 2011 type crash in real estate, but I think I think the real estate market's going to weaken to the weakest we've seen it since then, probably. Since then, I don't think we'll have ever seen it weaker since probably that whole time period. I think new home orders are going to dry up. I think a lot of these home builders that are building homes like crazy, they're going to deliver those over the next, 6 months or so. And then after that, the next group ain't common. Like, I think home orders are going to dry up massively. And so Wall Street, I think, is almost tricking people to say, oh, real estate's fine, housing stocks are going to be fine. And really, in reality, I think there's so much trouble brewing in real estate, I don't think people have any clue. And it's going to hit market by market, month after month after month, where the riskier markets, the hottest markets that have been the hottest markets, those ones will cool first. You'll see that start to play out in June. It already started in May, but you'll really start to see it play out in June, in July. And then by the end of the summer, in my opinion, it's going to hit every single market in the United States. And by the end of the summer, there will be no debate on if real estate's weakening or getting into some trouble. It will be a foregone conclusion, as they say, of yes, real estate's in some major, major trouble. But right now, if you look at housing stocks, it's almost giving you an illusion of, oh, everything's got to be fine. Toll Brothers is up 9% in the past month. It's good, right? No. And it's going to get a whole lot worse, okay? So be careful when it comes to that. Now, something else interesting is the safety stocks, right? I have this watch list that, includes what most Wall Street would consider safety stocks. And, what I've noticed with this list, it hasn't looked so safe recently. And I've been looking at a lot of these stocks, especially over the last few weeks, and their performance is awful. Like, you go through a lot of these stocks' performance over the last 2 or 3 weeks, it's sad, I guess you can say. Like literally pull up a 3-week chart of almost all these stocks, and oh my gosh, like some of these stocks are down, 10, 20, 30, 40% for some of these stocks in like 3 weeks. And these are supposed to be the safest plays to pretty much put your money in, right? That's what Wall Street tells you. You look at a lot of the performance of these stocks and over the last several weeks, and you're going to say, no, it's not too safe, okay? Now, we got a problem. WTI's climbing again, okay? Oil continues to be an issue. Oil's an issue for the overall economy. It's a bad issue, right? And I'll tell you when I think this is going to peak in just a moment here, okay, as far as oil price. But this is obviously not good for everything. One, obviously this makes the inflation numbers look worse if oil continues to climb and the gas prices continue to climb, right? But two, ultimately, this takes more money out of people's pockets, right? And so this is not good news. This is bad news, no doubt, for the economy. And it's just it's just a bad thing for the market. I mean, there's no other way of putting it. It's just a bad thing for the economy and for overall business. Almost no one benefits from this other than maybe oil and gas companies and, maybe people playing the oil price or something like that. But ultimately, at the end of the day, there's not a lot of good that comes from this. There's not a lot of good. It's just mostly bad. And so that's troubling to kind of see this. But here, Wall Street is playing tricks on us again because look at this next thing here, okay? There's oil and gas stocks. I mean, you would have thought oil's reaching new highs. It got to be a great day for oil and gas stocks. No. Chevron was down 2% today. ConocoPhillips was down 2% today. ExxonMobil was down 1.6%. Shell was down 1.3%. Marathon pulled out a gain. But, you see that. And just like conventional wisdom would tell you, oil's going up. Oil and gas stocks have to pump today. And no, they're not pumping. They might be pumping the oil out of the ground, but the stock prices aren't pumping today, right? And so these are like the psychological tricks, I guess you can say, that Wall Street loves to play on folks, that it's just like, you think this means this, but then it doesn't mean this. And so Wall Street's the king. Like Wall Street's literally the king of you trying to say 1 + 1 = 2, and they're like, no, 1 + 1 = 50. And you're like, what? And then you're like, okay, 1 + 1 = 50. And they're like, no, 1 + 1 actually equals -20. And you're like, what? they're the kings of that game. And just when you think you got it down as far as trying to predict anything short term, they snap their fingers and it's like, what just happened, man? Something's different than I thought. Now, this is big. This kind of made a little back page news, but I thought I would bring this to your guys' attention because this is big. $250 billion in rebalancing inflows should be coming during the month of June. Now, I'm not sure exactly when that money is hitting the market, if it's going to be toward the beginning, the middle, or toward the end of the month. That I don't specifically know, but basically what's going to happen is a lot of bonds are going to have to be sold. That money's going to be rebalanced into a lot of stocks, and obviously that should be a good thing. And so I think, because I've been hearing in the caves of the stock market that a lot of people are predicting a ripper rally in June. We'll see if we get that. I'm not predicting that. I'm just, I'm covering it, and we'll see if we get that, right? But a lot of people are predicting it. I think one of the reasons is because of that number there and the rebalancing. And so I think a lot of folks think there's going to be a lot of buying pressure that comes in the market. There's a lot of stocks that are heavily shorted. I was looking at one of my stocks that I own. That's a heavily shorted stock. That stock, I think it was something like 30 days to cover for the shorts. Like the shorts have gone way overboard with shorting, and they've had a great time shorting because the market's been in a bad place and a lot of stocks have dropped significantly. But man, they're playing with fire now. And if you get some rebalancing with some short squeezes, you could be looking at a lot more stocks up 40-60% in a matter of a 2 or 3 week span. And so, we'll see what happens with that. But just be aware that is going on. Sometimes it's important to understand these things that are kind of going on beneath the surface, okay? Now, and kind of my advice to everybody is, you got to have tunnel vision in this sort of market. There's so much going on. There's so much being thrown at you that it's hard to even decipher, like, what's good, what's bad. You're hearing about inflation. You're hearing about the Fed, worries about the economy, real estate. All these different things are being thrown at you. And ultimately, the goal with a lot of this is to try to get folks to make short-term decisions around money. Because inflation, that's a short-term thing. That I guarantee you in a year from now, they're not even going to be talking about inflation. If anything, the discussion might be deflation, okay? But that's going to go away. The Fed is 6 months from now is going to be a totally different Fed than the Fed we're seeing in front of us right now. And 6 months after that's going to be a new, totally different Fed in terms of the way they react and the way they do things. And so all that stuff is short-term mumbo jumbo. When you own companies that you love for the next 3, 5, 7, 10 years, you got to stay focused on that. And if they are really discounted, you buy those stocks, you throw them in the filing cabinet, and you don't worry about, it might go lower because the market's trending down right now. Don't get into that game. It's a losing game. Have tunnel vision. If you're brave enough to pay attention to it all and keep track of it, cool. But outside of that, keep your tunnel vision on, okay? Hope you guys enjoyed this as always. Much love. I appreciate you guys joining me. If you're looking to join my private stock Discord chat, my private stock group in general, check out pinned comment down there to apply to become a member with us in there and get access to everything you get access to in there. Much love and have a great day.